Test. Yeah, there we go. All right, 40 minutes to discuss the future of Bitcoin. Easy, I would say, right? Sufficient amount of time. Yeah, a couple of words from my side. I'm David. I work for BTC-ECHO. We are the largest German crypto media, and I'm happy to moderate a panel. Just let me quickly introduce the panelists. So on my left side is Jullian Duran. He's a product lead at Marathon Digital. He leads Anduro, an innovative unit building layer 2 chain and apps to accelerate Bitcoin adoption. Formerly, he led an education NGO in Latin America, worked in US politics, and built fintech products in Southeast Asia. Then we have to his left Adolfo Contreras. He is a business developer and strategist with a background in marine electronics, telecom, energy markets, and Bitcoin for the last 8 years. And also welcome to Scott Millar. He is the CEO of SideSwap, and I got his bio like yesterday, so I didn't have much more to say, but I'm confident we get to know him better in the panel. Last but not least, Tobias Seidl. He is the co-founder of STOKR, a service that helps issue security token on Bitcoin. For example, STOKR works together with Blockstream to offer so-called mining nodes, and I'm really curious to hear about those. To participate in yields generated by Bitcoin mining, and I'm sure that's quite interesting. All right, let's get into it. Why should we scale Bitcoin? And I'm curious about all of your opinions. Maybe start with you, Jullian.
Yeah, absolutely. So I obviously work for a very large mining company and one that holds a lot of Bitcoin. And so for us, what scaling Bitcoin is all about is let's drive more value to the asset that we hold so much of. Let's also drive new forms of revenue, which the miner business model is all based on the block reward. And so if there are more people using Bitcoin, there are more people transacting it, then we make more money from it. And so fundamentally for us, scaling Bitcoin, nothing to do with token values, nothing to do with press, everything to do with transacting, volume, and activity.
Yeah, for me, I believe blockchains have trade-offs, right? Which means that if you want to improve some feature, it will always be at the expense of making another one worse, right? So since the security of the main token is kind of sacred, nobody wants to mess with it. So the way to scale it to enable faster transactions, cheaper ones, and advanced functionalities is not to have conflicting interests on the same chains, but with a layer approach instead. So that's why we believe that with a layer 2 we can enable faster, cheaper, confidential transactions, digital asset issuance, and all these more fancy features that don't compromise the security of the main token.
You want to go ahead?
So on our part, we view Bitcoin as the main reserve asset out there. All the other chains, so Bitcoin is the main chain. So if you want to scale Bitcoin, so it becomes like part of it, capital market infrastructure, etc. Since Bitcoin is a one asset only chain, it needs different scaling solutions so that you can issue everything from securities and build capital markets and other tools around it. And doing so, you need side chains around Bitcoin. Much like central banks have commercial banks which issue their own cash, Bitcoin needs side chains for asset issuance, and then you can settle on the main chain at the end of the day or whatever cycle. So I think side chains are the crucial component in terms of scaling Bitcoin so that it can be used for areas other than just pure Bitcoin payments between users.
All right. As we are like tokenizing actually financial instruments on Bitcoin, or better to say like on a layer 2 solution like Liquid, Adolfo here from Blockstream, they are crucial in developing like this kind of technology. We see actually Bitcoin as like the backbone, the future backbone of the financial industry. And that's why we believe scaling will be essential, right? Because obviously like the transactions speed is like too low and like the costs are too high. When you have like a layer 2 solution, or maybe like then even like layer 3 solutions, how we see our platform, then obviously you can build on Bitcoin. And why is it important? From my perspective, it's very important because like Bitcoin is like the only I consider like the only decentralized blockchain, truly decentralized, and is using proof of work instead of proof of stake. And when we want to build something for the financial industry, you know, to replace the financial industry how it is right now, you also need to replace actually the way of how like the whole backbone is actually built. And when you do proof of stake, for example, then you just like mirror actually what's happening right now in the legacy financial world, right? So because like then you have like still like the agglomeration of power and so on. So in this sense, we believe it's essential to have a proof of work protocol for the financial industry, and that's why scaling is important.
Proof of work is a good segue. You work for Marathon. Marathon makes their revenue on on-chain transaction. Now I learned that you're also developing a second layer solution. Aren't you stealing your own revenue? Why would you do that?
That's a good question. So, as a lot of the other panelists have noted, the Bitcoin main chain is designed to be simple. You know, this is really what I believe drives a lot of the value behind Bitcoin, the fact that it has this limited supply, the fact that you have proof of work at the heart of it, and the fact that you don't have very complex logic trying to operate at that base chain that then creates security vulnerabilities. I think there's a lot of debates within Bitcoin about trying to make it look more like ETH, make it look more like Solana. My personal opinion is I don't think that makes a lot of sense. There's you know, haphazardly changing such a valuable protocol could really just, you know, throw the baby out with the bathwater, as they say in the US. So when I think of like layer 2 and with Marathon, obviously we're doing, you know, we've launched Slipstream, we have Marapool that's getting better every single day. You know, we have a lot of things that are trying to drive us more transaction fees on the main chain. But fundamentally, the main chain was not designed to do things like tokenizing financial instruments at scale or solving cross-border payment problems for people in emerging markets that are sending, what, $50, $100 across borders. You know, these are the sort of problems you need a scalable piece of software, a scalable ledger, a more flexible ledger to do. And so it made sense that we should go with the second layer to create not cannibalizing transaction fee revenue, but rather additive. So have two sources of revenue as opposed to one or three or four or five, etc.
And that's a more famous scaling solution, Liquid. I'm really curious to hear about Liquid in general. What's the idea behind it? What can it do?
Yeah, Liquid, yeah, as Jullian was saying, basically, in my opinion, the main layer of Bitcoin is, I'm a great fan of Nick Szabo, right? This cypherpunk, and I've read everything from him. And one of the things the focus of his work has been basically creating institutions in cyberspace, right? And to enable trust in cyberspace, you need to do either replacing existing institutions that don't work, and one of those institutions is laws, and laws don't work in cyberspace. But the other one is extending the reach of existing reputed institutions. And that's what Liquid does in a nutshell. It does it with all the, let's say, philosophical underpinnings of Bitcoin, because it uses the OTXO model, it uses the Bitcoin code base, it uses a number of features that enable financial markets in a way more efficient and secure way than current ones. And the problem that, in my opinion, this solves is that many assets are locked in emerging countries where laws also don't work as well, you know, and in cyberspace. The rule of law is poor in those countries. So if you want to unlock those assets and connect them with global liquidity, you need a blockchain that is able to substitute the work of many traditional institutions, such as national stock exchanges, right? The clearing houses, depositories, even central banks, if you have the financial layer on top, which is Bitcoin. So the whole idea of replacing many federations, many traditional institutions, which are federations, for just one computer network that adds all this logic to the assets, it's fascinating for me, and that's what I see Liquid performing.
And Liquid is also used by SideSwap and STOKR. Maybe you guys could more get into how you use Liquid. Maybe Scott, you want to start?
From our perspective, we've built a wallet as well as a swap market built into the wallet, where we have something we call a swap limit order book, so that anyone can trade peer-to-peer with each other. Since there's more than one asset on the Liquid network, users are able to swap assets between themselves without having to trust any third-party custodian. But what this also does is it allows users to build an order book in any asset that they hold within their wallet, and any other user can come and pick up that order. So it's a fully peer-to-peer, depending on your definition of peer-to-peer, but it's effectively a peer-to-peer marketplace where we host the order book, where we have UTXO commitments where users can trade with each other. And this includes also securities that can be issued on Liquid. So any securities that are issued by the issuer, they're able to create instantaneous liquidity without having to go to an exchange and pay listing fees, etc. So that these actual securities are held by the end users and can be traded peer-to-peer between them, just for free. Basically, we have a very small fee of 0.1% on every swap. But that's effectively what we've built, and we have a fairly dominant position on the Liquid network. So all the securities issued on Liquid, we have them listed in our marketplace. I think 70% of the volume that goes in between Bitcoin and Liquid goes via the SideSwap function, where we help users move between the two different chains. So we have an actual Bitcoin sidechain with actual businesses up and running, which work, and we have functioning swap markets, so that we can envision a different type of financial system where users actually hold the assets themselves. They're able to trade between themselves without having third-party custody. And most of our volumes in that regard is actually between Tether and Liquid Bitcoin, how that's traded between users. So that's what we've built, so it enables these type of peer-to-peer markets, since you have these multi-asset chains, and there's no custodian involved, so users can swap directly between themselves, and that's how we see things moving forward. And with assets, if you want to go to an exchange and have them listed, you're free to do so. You can list your asset at multiple different exchanges, but users should also have the ability to swap these assets between themselves without having to go to a centralized custodian to rely on them. And that's the infrastructure that we're building, and it's up and running. I mean, we're continuously developing. We're not doing much marketing, but everything works. So, it's an actual live, a bit more than proof of concept. It's actually in the market. We've even issued our own equity and found the legal structures to do so. And so we very strongly believe that Blockstream is on the right way, and hopefully Marathon soon as well. Once they go live. But we strongly believe in the concept of sidechains around Bitcoin, and that's the scaling solution for Bitcoin, and that's how we move forward.
Thank you, Scott. So basically, maybe I will just quickly explain how this tokenization is working on the Liquid blockchain. So basically, what tokenization means, like from financial instruments, is actually that you have an investor register, which is held by like the issuer of the financial instrument. Can be like any SPV, can be any company, right? So it's held actually at the company's office still. And what the blockchain solution is doing, like Liquid is doing, and that's a very beautiful solution, is actually constantly updating the investor register 24/7, right? Then you might say, okay, then might also any other blockchain solution do. But Liquid has actually built with like the AMP asset ready-made use case for financial instrument tokenization. So you can really plug it in, and you tokenize, and you're like compliant with, for example, we are operating out of Luxembourg with Luxembourg corporate law, right? Then there are options like to freeze like the assets, to do forced transactions and the like. So you don't have like to always build like your own smart contract. You can immediately use it. And I think another beautiful feature of Liquid is obviously this. It's a little bit complex. I will not explain it. The homomorphic, it's a confidential transaction, so it's very important, I think, for the financial markets that you cannot see directly. Everybody cannot really see that they can see that there are transactions, but they cannot see like the amounts which are actually transferred. So this is like an essential tool for financial markets, we believe. And and then it's obviously For us, it's a link to Bitcoin, and we are building also Bitcoin-related products, right? Like, so everybody loves it, and to use it because it's sometimes pretty hard when you have a Bitcoin maximalist to use like an EVM chain, right? But that's how we do it.
It seems to be the case that Liquid is more of an institutional sort of side chain. Is that correct, or is it also for retail?
I mean, there are several use cases. One of them, of course, is simply people that find fees very expensive on the main chain. And we frequently see people that when the fees go up on the main chain because of some I don't know, ordinals or something like that, then we see a wave of companies joining Liquid simply because they want to save on fees. And then they want faster and cheaper transactions, and that's it. But the other use case, probably the one I'm most excited about, is capital markets, the one I just mentioned. And Liquid has a number of, in fact, I may add that the total value logged on Liquid already exceeded the 1.8 billion recently. So, and most of it is actually securities. And most of them are actually the assets that are logged in some emerging countries where, these sometimes non-banking financial institutions have problems to access liquidity. So with a secure and trust minimized blockchain, we're enabling the connection between those assets and global investors, global lenders. So I find that probably the most interesting use cases. But then, of course, Liquid is, since it uses the UTXO model, is compatible with Lightning Network. And we have a solution for that to enable as well fast and cheap transactions for any Liquid asset. So that's another use case that is not still as big as capital markets, but I expect a lot.
We're going to talk about Lightning as well later, but I'm curious to hear about Anduro. Is it more retail-oriented or institutional?
That's a great question. So when we first started with the whole Anduro project, the thesis we approached with that with a year and a half, 2 years ago when it began, was the world of Bitcoin Layer 2 is getting completely beat out by the Ethereum and the Solana worlds. And that still remains my conviction. And I remember when I started this project and I go out to the market and talk, to people that, and I'm thinking of maybe like investing in a Bitcoin Layer 2, that Marathon's thinking about it, and everybody told me, no, the scaling world for Bitcoin is all saturated. That's a complete lie. And I think now that we've seen there's 100 plus Bitcoin Layer 2s that have come out in the past 7 months, most of these things are just blatantly fraudulent, and they are getting a killing amount of Bitcoin from East Asian companies, from wealth managers, from miners. And so going back to your question, we need to attack on all fronts. There needs to be a retail solution. There needs to be an institutional solution. And the way that we designed Anduro is to be multi-chain from the get-go. We said there's no one development standard. There's no one approach to programmability. Developers, there are many different types of developers, just like there are many different types of use cases. And so we need to provide a technical stack that's flexible to those things. We also designed Anduro to kind of take Bitcoin scaling in a new direction, because the Lightning narrative has been very often played, and having now built, and we're building tokenization platforms, payment platforms in emerging markets, I'm finding that a lot of people, a lot of banks, a lot of exchanges in these parts of the world feel underserved by the existing array of Bitcoin scaling solutions, and they're literally just going to Solana. Point blank, that's the thing. And so I think what's at stake for Bitcoin is kind of taking a macro approach and saying, all right, we are falling behind on the scaling debate from these other ecosystems. Let's try to create new and innovative tech that kind of lets go of these old narratives, tries to focus on new ones, and most importantly, do better business development, because I genuinely believe that's the biggest inhibitor to what is keeping Bitcoin from literally taking out all these other chains. I mean, it's the sleeping dragon, right? It's China in the 1970s, and we just need a Deng Xiaoping to come and like open this thing up. So yeah, anyway, that's kind of how I see it.
That's interesting. Let's talk about Lightning. You are bearish on Lightning. Did I get that right?
What I'm bearish on is on focusing on the same solutions that have not demonstrated traction. So I wouldn't say I'm bearish on Lightning, because like as most other people that are using payments, that are trying to make payments on blockchains, most of them find the user experience of Lightning so difficult that they're going to other chains. And so because of that, my view on it isn't so much, hey, Lightning doesn't work. My view on it is, there is no traction behind that. And when people talk about, oh, there's a lot of Bitcoin locked in it, that people are using it, I've talked to the exchanges in emerging market countries. I've went and spoken to these different fintechs. Nobody is taking that solution seriously. And so that, to me, I don't know what the failure is due to. I don't know why that adoption isn't winning. But when you hear about companies like Visa adopting Solana for USDC stablecoin pilots in Kyrgyzstan, I was just inflamed by that. Like, why would they use Solana for an emerging market bank's US dollar settlement? That is a failure on so many fronts, and we need to beat them at that.
Yeah, I mean, to say, yeah, Bitcoin is definitely the dragon, the China of the 90s, I love that. But I also have the opinion that the way the incentives have worked in the crypto industry have totally been a distraction with regards to Bitcoin. So for us, you probably have faced this, when we want to talk to a custodian, an exchange, an issuer, and sometimes developers as well, we've noticed that there's a dynamic in the industry that many blockchains have raised money with their native token, and with that money is that the way they raise their ecosystems, right? It is a totally inorganic way of growing. So we in Bitcoin don't have that, right? So we have really had to focus on solving problems. At this point, I used to think it was a disadvantage some years ago, but now I think it's an actual advantage, because it has forced us to really understand what this technology is actually solving huge problems, right? And then with regards to Lightning, yeah, I like to find explanations, right? And to why it hasn't worked with regard to Bitcoin. And well, I don't have metrics. I know it has been stagnating, and Lightning, again, is not my expertise. But Lightning faces many issues. The first one is that it has been used to pay a very unstable asset. So if you're expecting the asset to rise in price, you're unlikely to be willing to pay with it. If you're expecting to sell something for Bitcoin, and the price to go down, you're unlikely to expect somebody. You're very unwilling to collect money with Bitcoin if that's the case. So, but there's also other challenges which have been like channel management of liquidity, things like the node management. And that's why I think that and also when the fees are high on the main chain, the translation or the moving of on-chain Bitcoin to Lightning is very expensive. So it totally defeats the purpose of Lightning in the first place. So I think that that is why I actually think that Liquid is the solution, because Liquid is so cheap and it's UTXO model that if you want to pay with Bitcoin, you will be better off with Liquid. But I still think it will be an issue to pay with Bitcoin because of this volatility. So for a long time at least. So I think that's why I'm very excited about the projects we have with stablecoins, because with stablecoins you don't have that issue. And the way to translate between Liquid Bitcoin and Lightning Network is super cheap. So you don't have the issues that we face when the fees are very high on the main chain. And so, but there are other assets other than for payments that require fast and large throughput. But there are other ways as well, because Liquid is an implementation of the Elements code base. It's basically an open source project. So anyone can actually go to the website and start their own Elements-like implementation. So we have projects as well that instead of using Lightning yet, you can just change the parameters of Liquid and have faster blocks for payments and other use cases, again, because it has trade-offs again. But these side chains can be, again, connected to Liquid and to Bitcoin itself, so you can solve for different trade-offs whenever there's the need for it.
So 2 Lightning bears. What about you, Scott?
Well, I think I understand it, but I haven't really heard a coherent argument for it to work from end to end, and I don't think anyone's managed to implement anything yet that could actually scale. And so the very positive thing about it is that it's Bitcoin native and has all the security aspects which people love and which we should support, which sidechains do have trade-offs. So Lightning is very tantalizing in that regard, but I don't think it's been made to work yet, and it's not built for asset issuance, it's not built for many other things, and as soon as network fees goes up, it kind of goes out the window when you need to rebalance, and so that's why I think it hasn't taken off, because it looks fairly good on paper, except for the last bit, and no one's managed to implement it properly yet.
May I add something? I forgot to mention that the node management and liquidity thing is we have created a solution which is called Greenlight, and it basically it's like Lightning Network as a service, but non-custodially. So it enables what I just described: this payment with stable coins without the need to understand the protocol itself. So that's what I had forgotten to say. Yeah, go ahead.
So Adolfo, you saved it, right? I did not want to further shit on Lightning. I think like Lightning is has a lot of issues, right? Like the channeling is complex, but I think like it's good for smaller transactions. For us, as we do asset tokenization, and we have definitely larger amounts, it's not really useful. We recently paid out more than 1,200 Bitcoin to our investors on the platform, and I think we would not use Lightning solution for this one, right? So I think this is like something to consider, and then also like, yeah, I think that's probably one of the main points I would say about Lightning for our use case for asset tokenization, right?
Are you still bullish on Bitcoin being like a transaction medium? I'm not sure. This was too pessimistic. I'm really curious to hear your opinion, whoever wants to take this.
Definitely very, very bullish on that because, so taking a step back, like you mentioned it in my intro, I've worked in fintech before. I know the payments landscape in emerging markets. The most important thing to try to innovate financial systems in different parts of the world is everyday people need trust in the currency that you're using. That full stop. That the security, block times, wallet UX, none of that matters. The thing that matters is, do fundamentally the people believe in the asset that they're being used to get paid in, the asset that they're paying others in? Do people believe? And I think no other blockchain has anything that comes close to that. Even people talk, USDT and how, everybody's using that in the emerging world. Okay, I come from the emerging world. Not everybody is using that. USDT is still a novel phenomenon. There are some people that are using it. There are some businesses that are into it, but I would not say it's mainstream yet. So the way that I see it is the only cryptocurrency out there that is mainstream, something that if I went to talk to a villager in a random country in the global south and went to talk to a Manhattan investment banker, the only cryptocurrency that if I'd mentioned that both of them would recognize or at least have some opinion over, it'd be Bitcoin. And so Bitcoin, that's why I say the sleeping dragon, because everybody knows that thing is going to wake up at some point. Solana and all these other, chains, I completely agree with Adolfo. I think you have to grow organically, and all these other chains are not doing that. They're terrified of what's going to happen when the dragon wakes up. But I really think that Bitcoin it's the only one that can be a payment, a method of payment in these parts of the world, because you need an Apple, Microsoft level brand value in order to be a global payment system, and Bitcoin already has that. But it's just a matter of the scaling, right? The fees have to be lower. It has to be more stable. I don't even think block times to a certain degree matter. People in most parts of the world are used to getting their paychecks after like a week of waiting. But it has to be cheap, right? That's the number one thing. And stable, like he mentioned. You can't be an appreciating asset. No one's going to want to pay.
Tobias?
I mean, how we see actually like the angle here for Bitcoin again. I'm going like to do like a little advertisement for the Blockstream mining node, because like this is like a project we were working together. So we also like introduce like different. So I think like the idea, what is really important for the financial industry is that you also create like a surplus return actually also on Bitcoin, right? Because like Bitcoin is like something you mainly hodl, right? And that's what we are trying to provide, is like that we say, okay, we actually build like a financial instrument where you can actually make money on Bitcoin. And I think we have launched now the Blockstream mining node 2 in the last 21 days. It made already more than 9%, right? In total, I think on Bitcoin return for the Blockstream mining node, it was more than 35% on Bitcoin in average. But when you have been early in the game, you invested like 4 Bitcoin and you get like 7.9 Bitcoin back. So it's like really return products. I think it's very important also for the Bitcoin world. So to make it also like sort of lively, right? So the adoption will be more and more also like for the financial industry, in my opinion, when you create products on top of it. And that's where we see also the future. And then I think things fall into place when you also use actually the underlying blockchain Bitcoin, right, for the tokenization, as we say. Yeah.
All right, last 5 minutes. Give me your short version of your vision of Bitcoin in the next 10 years. Global settlement layer, payment layer, shoot, 1 minute each.
Yeah, I think in my world, and what we try to focus on Enduro is how can Bitcoin be the technology to revolutionize fintech? Because financial technology in today's form is not really technology. It's navigating regulatory parameters. It's negotiating with existing banks. You talk to most fintech unicorns, they're not tech companies. They just have a good preferential deal with Standard Chartered or HSBC. And so really for me, I think the vision for Bitcoin in the next 5-10 years is it solves billion-dollar payment problems. It solves billion-dollar financial technology problems. And these fintechs that are out there engaging with businesses, providing banking services in places that don't have them, that those fintechs take Bitcoin seriously, or at least find it simple enough to integrate and empower themselves. Because that is right now something that I don't think exists, and that's what we're trying to do. So whether that's layer 2 technology, whether that's more interfaces, whether that's liquid, whether that's coordinate, whether that's whatever, whether it's even Lightning, the most important thing I think for Bitcoin is to focus on those billion-dollar technology problems and focus less on trying to copy what's going on in these other ecosystems. We don't need more degens, we need more mainstream.
Word.
Yeah, again, I'm a hardcore follower of the Nick Szabo School of Economics, and for me, Bitcoin has always been the institution of wealth transfer, or in general terms, you could call it the institution of private property. That means that it can be used as a means of exchange, but whether it will be accepted generally as a means of exchange, which would make it turn it into money, that's an entirely different question. What is undeniable at this point is that it is that institution of wealth transfer. So for me, that means it is an ideal settlement layer, just simply as any registry handled by any law or current traditional institution in Western countries. So for me, the problem it solves is that when you have poor rule of law, you need to know you own something regardless of whatever the dictator around you is going to say, right? That censorship will not work, that it will be you as long as you keep your secrets properly, etc., etc. And then the other layers will solve other problems that with the different trade-offs with regards to capital markets, payments, etc., etc., right? And that's the way I see it moving forward.
Thanks.
Thanks. I very much agree. Bitcoin is the settlement layer. It's the main chain against which everyone eventually settles. Around it, we will have many different side chains being built, where you have all the other asset issuance, where you have all the other payment layers, where everything else is built around it. And at certain intervals of periods, all of these chains will settle against the main settlement layer, which will be the Bitcoin layer. And that's how we build capital markets around Bitcoin. If you imagine, in the financial system today, any payment you make never goes through the central bank. It always goes through the commercial bank layers, and then the commercial banks settle at some periodic interval within the central banks. And it will very much work the same way with Bitcoin, and Bitcoin being the main settlement layer, since it has that trust, security, open access, all of these attributes which make it into the reserve currency, basically. So the task now is building a full financial ecosystem around it. And I think it's possible, and that we will succeed. Thank you.
Yeah, I think we live like in a world that's getting more and more controlled, right? That's at least like my point of view, and I think like I've seen like just like a panel on CBDCs, and everybody was so super exciting about it. I'm a little bit more skeptical, right? Because like it's programmable money, and they can take it always away from you when you do like something wrong. You don't pay your taxes. You have reached like your CO2 quota, and the like. Nobody talked about this at this panel. That's why I said it. And Bitcoin is like the opposite, right? So Bitcoin allows you really like to store your own value, like everything what you have earned over time, and it's independent from outside control, right? So I think this is like what I said in the beginning. Also, like considering the financial markets, right? You have proof of stake, proof of work. Here we see with Bitcoin, Bitcoin has everything what like the current financial system is not actually currently providing. It's intransparent, right? There's like an agglomeration of power, right? And there's a lot of control also over your assets, and on the opposite side, Bitcoin will be like the future money, but also like the holder of the, or like the backbone of the financial industry. My belief in 10 years, maybe not in every country, but I see it definitely coming.
Thanks, Tobias, Scott, Adolfo, Jullian, for your insights. Thanks for the audience to stick around for the last panel. I hope you learned a lot. I certainly did. And I'd say enjoy the rest of the conference. Thanks.